Hey everyone, this is Mike from Hummingbot, and we're coming at you with another edition of Hummingbot Live, the weekly show where we show you how to make money with Hummingbot, the open source crypto trading bot that trades on both centralized and decentralized exchanges. So, lots of topics to talk about today. I will just give you a preview of the agenda. First, we're going to talk about what's happening next week. We have which is San Francisco Blockchain Week. We have a bunch of events, and we're also going to be making a big announcement. So behind me, this is the little kind of schedule that I have written up. So next Wednesday, we'll be launching kind of like this new, kind of like the new evolution of our liquidity bounties. We had a lot of success showing that the community from Harmony Protocol could make markets for them and provide the liquidity that that token needs. And so we've signed up a bunch of other partners, and we'll be announcing how the next version, like V2, of that will work. So we're also writing a white paper about it, and we'll be launching that as well. And so we'll be talking about it at two events on next Wednesday. The first is a community organized DeFi meetup called macro.wtf. Feel free to go to the website right now. It's run by our friends Tina and Taylor. They're great folks. Please check it out. And secondly, we'll be presenting at the 0x meetup later on that evening. Next Thursday, we have a special edition of Hummingbot Live because, of course, it's Halloween. And so we're incredibly excited to have Paul from Augur on the line. And we'll see, but we may end up dressing up as something. And then finally, Friday we'll be presenting at the SF Blockchain Week closing event at Solana headquarters in San Francisco. So with that, second topic. So as you see, I'm wearing something new. This is my new Hummingbot hoodie, and we just got them in stock today. And I think swag is something that we always want to give out. So if you're, and especially for the folks in our community who are community ambassadors, as you know, we started this program recently for folks in other parts of the world to help us, educate people, host events, and so forth. So if you want this sweatshirt, please reach out to Yingdan, and we'll, if you're an ambassador, we'll try to get one to you somehow. And then, so now, so let's talk about the topic of the day, and which is, as you can see behind me, I didn't really write it very well, but it is tick size. So the way that we want to do this, and really, because we realize that there's a lot of things about algorithmic trading which are just not that known to people, because for a long time, only hedge funds and banks and trading firms could really do it. So I want to kind of like really spend more time to educate people about some of the more theoretical parts of doing algo trading. And in fact, we're actually going to do some market making right now without actually using a bot. So I think that'll kind of ground the discussion in more theoretical terms. So, and then finally, I should add a disclaimer. Everything we do in Hummingbot Live is for educational purposes only. This is not financial advice. And we have a lot of users outside the US, which is why we may show how you can do algo trading on exchanges which geofence the US from them. So to start off, what is tick size? Tick size refers to the smallest denomination of something that you can trade in a market. So, for example, let's say it's let's say it's 1 penny is the smallest tick size possible, and you're trading something that's like $100. So the lowest possible bid price for that asset might be something like 100.01, and then someone's buying for 100.00. So the tick size then is 1 penny divided by the price of that asset. So that in that case, it would be something like 1 basis point. Now, in the blockchain world, as we know, a lot of assets are differ in price. So you have Bitcoin, which is like 7,500 right now. You have other tokens, for instance, like 0x, which is I think right now is about 30 cents. So these price differences kind of create these like kind of weird tick size things, and this actually be an advantage for market makers. There's if you want to research this, there's a lot of debate in equity markets about something called decimalization, which is what happened about 30 years ago now. Previously, stocks always traded in this like the minimum denomination was something like I think it was like 1/16th of a share or something like that, and so or like 1/16th. Yeah, it was some kind of like weird denomination. But then of course computers came along, and now you can trade basically any quantity you want. And so then before, like when you could only buy like $50 and 1/4 in terms of price, and now you can set prices down to the penny. It basically made things a lot more fluid in the markets. However, you may find it interesting that the market makers at the time, the hedge funds were providing liquidity for different stocks in the U.S. stock market. They actually hated this, and they hated this because market makers make money off the bid-ask spread, which means that the bigger the minimum difference there is between the highest sell price and the lowest buy price, you can actually make more money this way. And so a lot of market makers actually left the market because after decimalization, and especially for some of the smaller stocks where there wasn't a lot of trading and they had to hold it. And decimalization really led to something in U.S. equities called the small cap liquidity crisis. And there were a bunch of hearings and like congressional meetings about it, in the late 90s. Or actually, I think it was only like 7 or 8 years ago. Anyway, so this is actually a pretty new area. Apologies for the history lesson, but I think that tick size is something that I think all market makers should understand because it does actually drive how it works in the market. So as an example of that, let's turn over to Binance, and I'm going to show you how you can take advantage of this even without a trading bot at all. So this is Binance right now, so I'm gonna pull up one market and let's take a look at it. So the market I'm gonna pick is a token called HOT, and I'm gonna pick the Bitcoin pair for that. So it's the HOT/BTC pair. So, and the reason I've picked this pair is because this pair has an incredibly large tick size. So if you look over here, the lowest price that someone's willing to buy this thing right now is 0.0000012, and or actually let's sell that is, and the highest price that someone's willing to kind of like sell this thing at right now is 0.000000011. So basically what this means is that the bid-ask spread in this market is something like 9%. That means that if you bought at this price, and then if you sold at this price, you're effectively making like 9% on that trade, which is pretty good. So how do you actually do this in practice? Well, you could just kind of like, set an order here. So let's say I'll just set one order, so because I don't really want to buy this token. But let's show you how we can set one order. So I'll do this, and I'll just say I'll buy. I don't know how much I can buy. What's the denomination here? So I think I've just probably set something like 100,000, maybe. I don't know if that makes sense. 100,000. So let's do a limit order like that. Yeah, actually that's too much. I don't want to buy that much. Okay. Oh, okay, this is my order. And then if I had some HOT, I would also sell as well. So I put another order here on the sell side, and that's it. I just wait. So the thinking here is that there's some activity here. If you look at the trade history, people are buying, selling this token. So if I set a buy order and I set a sell order, I go to sleep, I come back, and assuming that the price doesn't move, maybe this order and this order gets filled if I'm lucky, and then I've effectively made 9%, a 9% profit just on 2 trades. And so that's how you can do market making basically manually. And the trick is really to find tokens with a really trading pairs with a very big tick size. So how do you find these tokens? Well, so the reason here that this tick size is so large is because if you look at let's look at coin. Actually, let's look at CoinGecko, since that's probably those are, we know them pretty well, and we like this data site. So the reason why this works is because the price of Bitcoin is really high, and the price of Holo HOT is is very low. See, so HOT has the price right now is 0.000088. It's probably one of the lowest priced tokens in the top 100, and so that's why HOT versus BTC, you end up with like such a small price in BTC terms that basically, because Binance has like a limit of probably like 8 or 9 decimal places for prices, it basically means that the tick size is incredibly large. You guys can see this if you can see the chart as well. This is like a really weird chart, because like the price is just bouncing between these two levels, and like this looks nothing like a normal stock price chart. So here the 2-hour one, so let's say, how can you do this in the bot? So Hummingbot, I would say it's I would just try it manually, but you actually could kind of automate this with Hummingbot. So let me show you how. Okay, let's see. Let's go over to terminal. There we go. Okay, so I'm using version 0.17.1 right now. So we just hotfixed this yesterday. So I will then start the bot. All right, so let's see. I have paper trade mode on right now. I'm actually gonna turn that off. I think I can show you guys how it works live. So now we're in live mode, so I'm gonna configure a pure market making strategy. Okay, so pure market making. We're gonna create a new configuration. We use Binance, and I don't have any HOT on hand, but I do have some one. One also is the Harmony protocol token is also the price is also pretty low. So the price won't be as large as for HOT, but it's still for our purposes, the demonstration purposes, it should still work. So I will pick single, so I'll just put I'll just try to get the lowest bid ask possible here in this market. And so yeah, I'll just do basically set very low spreads. Note that fees are now incorporated into the pure market making strategy by default. So it won't set kind of spreads exactly at this level. It'll add the 0.1% Binance fee on top. Now, in order to kind of set this tick size based market making strategy, you basically never want to cancel and refresh your orders. The reason is because exchanges, let's go over to Binance over here. Exchanges use price time priority to determine when a fill happens, which order gets that fill. So what that means is, if you look at the HOT market here, there's 420 million HOT here. So this is actually comprised of many different orders, and they're arranged in a queue in terms of the priority of when who's first in line to be filled or to get a fill when a market order comes in. So the the folks at the top of the queue are the ones who've been around the longest. And so that's why when you kind of do these kind of like tick size based trading strategies, you basically never want to cancel your orders. You just want to leave them out there unless you absolutely have to. So we're gonna in Hummingbot. Well, I'm just gonna make this like really long, like super long, so it never cancels. Let's see. Try that. I think I need to do something like that. 5001. No inventory skew. Sorry for the. Looks like there's a bit of echo. Sorry about that. Now this is the delay parameter. This is also a pretty important parameter because remember you're placing one order on each side. So what you don't want to do is keep on trading only one side only, right? You want to make sure that if you trade one side, you're going to trade the other side, before you start trading on one side only. So I would put something like 1 hour here, and then so the next question is, do you want to enable the order filled stop cancellation? This is actually the most important one for the strategy. You want to put true here. And what that means is when one side is filled, typically Hummingbot will kind of go and just refresh all the orders. This one, it leaves that other order outstanding. And outstanding is important because remember, the exchanges operate on price time priority. So if you always cancel that other order, chances are you'll never kind of like get to the top of the queue. So this time, for this strategy, you want to leave it out there. So true for there, and we're not going to do penny jumping because this is a very liquid market. So let's start and see what that looks like on Binance. Okay, all right, so it looks like it's placed a few orders, and let's go over to Binance and see what that looks like. So BTC. All right, so here are my two orders. They're at the top of the order book. So what's going to happen is that when one of these gets filled, the other one will just stay there. And the one that gets filled, it won't add a new set of orders until for about an hour, for 1 hour after this gets filled. So that's basically it. So it's going to maintain the strategy. So overall, I would say Hummingbot is not designed specifically for this strategy. Our approach is really about trying to kind of like give users many ways to design their own strategies. So I think there are almost an infinite number of strategies you can take as a market maker. And what we're trying to do is kind of essentially have a bunch of different parameters that allow you to customize how a bot behaves in different ways. So that's why this is actually not quite perfect. But if you got some errors from Binance for a second here. Interesting. That's interesting. So yeah, it's clearly working. So I'm not sure why I'm seeing these like API key and network connection errors. But yeah, this is probably something we need to maybe check out later on in the logs. Okay, so I think that hopefully you have a gist of how to leverage tick size when you're doing algorithmic trading with Hummingbot. But just to finish my point, our goal at Hummingbot is not to kind of have these fully baked strategies that people just hit the start button and start running. Frankly, it's really hard to make money that way because trading is a competitive environment. So if we had everyone just running the exact same strategy, then pretty much no one's going to make money. So our approach is to have as much kind of like customization as possible, and to have these like different parameters that people can mix and match to design their own strategies. So this kind of tick size based way of trading is simply one. I'd love to maybe if anyone has other ideas for other parameters that you think we should add to make your kind of trading more effective, please let us know, and we'll add it to the backlog. So with that, I think I'm going to sign off for today. Hopefully you guys enjoy this brief lesson on how to use tick size. And as a final reminder, we have lots of stuff coming out next week. So if you're in the local Bay Area, please try to attend one of our meetups in San Francisco. And if you're not in the Bay Area, please join our August 31st Halloween edition of Hummingbot Live next week. All right, then. This is Mike again. I'm signing off, and happy trading.